It's Thursday, September 11th, 2025. Welcome to your daily news update on Blip Brief. Small but almost everything updated every weekday. Well, you definitely woke up to a market showing some real energy today. India's Nifty 50 closed up by a solid 0.4%, pretty much knocking on the door of that 25,000 level.
Yeah, and the BSE Sensex kept pace too, also up 0.4%. It felt, less like a correction and more like a collective sigh of relief, maybe.
Or a cheer, perhaps. So this wasn't just random market noise then.
No, not really. I mean, this surge seems to reflect a mix of things, both external and internal drivers. You've got that palpable progress finally on the India-U.S. trade talks. That's been a sort of low background worry, hasn't it?
Absolutely. It's turned into a bit of a tailwind now.
Exactly. And crucially, the market seems to be really pricing in the growing hope, maybe expectation of a U.S. Fed rate cut soon.
Ah, the liquidity factor.
Right. It's not just optimism, it's a bet on more global liquidity, which, historically tends to fuel emerging markets like ours.
Yeah.
Investor psychology seems to be shifting from let's wait and see to, okay, maybe buy the rumor now.
And nowhere was that more obvious than in tech, right? IT stocks just took off. Nifty IT surged, what was it, a significant 2.6%?
Yeah, 2.6%, and the BSE IT index up 2.5% too. That's a pretty strong signal.
So what exactly lit the fire under IT? Was it just the general mood or something specific?
Good question. I think while the broad sentiment helped, there were definitely specific boosters for IT. Donald Trump's more positive comments on the U.S.-India trade talks helped ease those tariff concerns that were hanging over the sector.
Okay, that makes sense.
And then you had the news about Infosys possibly doing a share buyback. Plus, there's wider anticipation of more buybacks across the industry. That signals confidence, right? Management thinking their stock is undervalued.
A classic signal.
Exactly. And it wasn't just IT. We also saw strength in domestic manufacturing and strategic areas. Nifty India Defense was up 2.6%. BSE Capital Goods rose 1.9%.
Interesting. So capital isn't just chasing global tech, it's also looking at homegrown strength.
Seems that way. It suggests a bit more breadth to the rally.
So drilling down to individual stocks, who were the big winners and who lagged behind a bit?
Well, Federal Electronics really led the pack, jumping a strong 4.3%.
Wow, okay.
And then you had Wipro and HCL Tech, both up around 2.7% and 2.6% respectively, again, highlighting that IT strength. Bajaj Finance also had a decent day, up 2.2%.
And on the other side?
Mostly autos taking a breather. Mahindra dropped about 2.5%. Maruti Suzuki India fell 1.7%. Bajaj Auto down 1.5%. Hero MotoCorp also slipped about 1.3%.
So a mixed picture there, despite the overall market lift. Suggests investors are still being quite selective.
Precisely. Even on a positive day, you see these sector rotations. The auto sector's been dealing with its own challenges, inventory, demand fluctuations. So a dip there isn't totally surprising. It shows people are picking their spots carefully.
Okay, shifting gears to the primary market, the IPO scene. Sounds like investors were busy yesterday. Something like RS 4,500 crore poured into 6 different IPOs.
Yeah, quite the flurry. Urban Company's IPO seemed popular, subscribed over 3 times on day one.
And the buzz continues, doesn't it? Lenskart IPO is coming up. Jefferies seems bullish on that one, potentially a RS 2,200 crore issue.
Right. And what's really fascinating is seeing traditional businesses tapping the market too. South Indian sari retailers are apparently gearing up for IPOs, aiming to raise maybe RS 20,000 crore collectively in the coming months.
20,000 crore from sari retailers. That's quite something. Shows the depth, I suppose.
It really does. It shows the appetite isn't just for new age tech. It reflects pretty broad confidence in India's growth story across different kinds of businesses. Oh, and Geopolitics sales IPO opens September 16th. One for the calendar.
Got it. And for investors looking ahead, trying to spot the next big themes, what are the whispers?
Well, our sources are flagging a few areas. There's talk of a trillion rupee charge in India's battery revolution, 5 key stocks to watch there.
Okay, batteries. What else?
A hospital boom, apparently. 3 stocks highlighted in what's described as a cash flush sector. Then you've got the drivers behind Indian steel stocks hitting record highs.
Steel's been strong.
Definitely. And defense stocks, potentially poised for a comeback after that recent 15% correction. Plus, keep an eye on stocks set to benefit from the AI power boom, the infrastructure side, and the geospatial boom, which is apparently moving well beyond just Google Maps.
Interesting. So a lot of thematic plays linked to big structural shifts, energy transition, healthcare, tech infrastructure, defense.
Exactly. These aren't just fleeting trends. They seem aligned with India's longer-term economic direction.
So we've got this market optimism, partly fueled by trade hopes and policy anticipation. How does this filter down to the real economy, to consumers and businesses? Let's talk about those recent GST rate cuts.
Right, this is potentially huge. Analysts are estimating these cuts could spark up to a massive Rs 1 trillion consumption
A
boost.
trillion rupees.
Yeah, and potentially lower headline inflation by up to 75 basis points. That's 0.75 percentage points. Quite significant.
That would certainly be welcome. What are the knock-on effects?
Well, you're already seeing it. The ad industry, for instance, expects a 15–20% jump in festive ad spending, maybe an extra Rs 10,000 crore just because of the new GST regime.
Because people have more to spend or businesses feel more confident?
Probably a bit of both. And the government's pushing hard for businesses to pass on the benefits. They've asked for revised price lists for durables, cars, urging dealers to cut prices for consumers.
So the aim is clearly to boost domestic demand, maybe cushion against any potential hit from those U.S. tariffs.
That seems to be the strategy. Keep the home fires burning bright.
And this ties into credit trends too, right? RBL Bank, for example, aiming to triple loans and expand branches by FY26. That's ambitious.
It signals confidence, absolutely. And yes, those GST cuts are expected to fuel credit growth more broadly for banks and NBFCs. Lower prices, more spending. It increases demand for loans, both consumer and business loans.
Makes sense.
What's also interesting is seeing private banks really pushing home loans again, trying to regain market share there, perhaps to offset slower growth in, say, SME lending.
A strategic shift?
Seems like it. And on the corporate side, we might see credit demand pick up this quarter. Why? Because bond yields are hardening. It's getting more expensive for companies to borrow directly from the market. So bank loans start looking more attractive again.
Interesting dynamic there. Now looking at where money's flowing. Gold loans hit a record high.
Yeah. Amid the price rally, could be a flight to safety, classic behavior, or maybe people leveraging assets. Hard to say for sure.
But at the same time, mutual fund equity inflows dipped.
They did, down 22% in August. Seems mostly due to weaker retail appetite and fewer new fund offers, or NFOs. And another little wrinkle, large cap MFs have been lagging their benchmarks recently. That's actually a reversal of the historical trend.
So what does that suggest?
Maybe investors are getting more specific, chasing thematic plays rather than just broad large cap exposure, or perhaps just being a bit more cautious overall on the retail side.
Okay, let's shift to government initiatives. Big news potentially for anyone with a Provident Fund EPFO, the Employees Provident Fund Organization.
Yes, they're looking at what they're calling EPFO 3.0.
Yeah.
The goal is bank-like seamless transactions. Imagine using an ATM or even UPI, the payment system, to access your Provident Fund directly.
Wow, that would be a game changer for accessibility.
Absolutely. Modernizing Social Security in a big way.
Right.
But that's not all. The government's also fast-tracking plans to build a huge pool of chip designers, aiming for 275,000 by 2032.
Part of that bigger semiconductor push.
Exactly. The vision is a semiconductor workforce of 1.2 million, making India a global hub. Plus, the cabinet just approved major infra projects, a high-speed highway corridor, a rail project in Bihar, over Rs 7,000 crore in investment there.
So a strong focus on both digital and physical infrastructure.
Clearly laying the groundwork for future growth.
Okay, let's zoom out to the global picture now, because, as we know, what happens out there matters here. First up, U.S.-India relations. Sounds like a bit of a thaw.
Yes, a noticeable one between PM Modi and Donald Trump. It looks like trade talks are restarting next week, which is easing those worries about potential tariffs.
That's positive.
Definitely. India is apparently in active dialogue with the U.S. on a trade deal and also talking to New Zealand. Plus, the EU free trade agreement seems to be moving towards a faster conclusion.
Good context to remember here. The U.S. had put extra tariffs on India over Russian oil, right?
Correct, an additional 25%. And Trump had also been pushing the EU to do the same to India and China. So this renewed dialogue marks a significant de-escalation. It helps sentiment, trade prospects, the whole lot.
And speaking of the U.S., still lots of buzz about a possible Fed rate cut next week.
The anticipation is definitely building. It got a boost from some unexpected data. U.S. wholesale inflation actually declined in August, first time in 4 months.
Oh, interesting.
And the U.S. job market is also showing more signs of cooling down. So both those things strengthen the case for the Fed to ease up on policy.
And the markets reacted how?
Predictably, the S&P 500 and NASDAQ opened at record highs on those hopes, investors betting that lower borrowing costs could juice the economy and corporate profits, classic market behavior trading on expectations.
Great. Now, turning to some geopolitical flashpoints. Closer to home, there's unrest in Nepal.
Yes, some political turmoil there. The PM resigned, calls for an interim leader. It's causing some unease for Indian students and tourists and, it could potentially disrupt bilateral trade. The Nepal army has actually stepped in.
Okay, one
You
to
know,
watch. And further afield, a serious incident over Poland.
very serious. Russian drones apparently violated Polish airspace.
Yeah.
NATO scrambled jets and shot them down. Reports are calling it the closest call to direct conflict since World War II. Raises real fears about the war spilling over.
That's deeply concerning, and tensions remain high in the Middle East, too.
They do. PM Modi condemned Israeli attacks in Doha during a call with Qatar's emir, citing concerns over Qatar's sovereignty. And in a potentially significant shift, the European Commission president proposed sanctions and a partial trade suspension against Israel over the Gaza war.
So, multiple hotspots with complex global implications.
Absolutely. Very interconnected and volatile situations.
Okay, let's look at some big corporate moves globally. Oracle had a monster day.
Unbelievable, really. Shares surged a massive 43% after they gave this super aggressive outlook for their cloud business.
43%.
Yeah. It briefly made Larry Ellison richer than Elon Musk. A big driver seems to be OpenAI planning a large purchase of Oracle's computing power.
Shows the sheer scale of demand for AI infrastructure, doesn't it?
It really does. It's reshaping the whole tech landscape. Elsewhere, Chinese EV giant BYD is apparently planning a renewed push into India as diplomatic ties improve.
More EV competition coming.
Looks like it. And it also highlights how Chinese EV tech is really influencing global auto design now. On the other side of the coin, though, Novo Nordisk, the Ozempic Wegovy maker, announced an 11% global workforce cut.
Oh, why's that?
Rising competition in that red-hot anti-obesity drug market shows how quickly things can change, even for the big players in pharma. Intense competition there.
Indeed. Okay, finally today, let's dive into our big scientific breakthrough. It involves a drug many people know, one that's been around for, 60 years? Metformin.
That's right. A real workhorse drug for diabetes. But scientists have just uncovered a surprising new secret about how it works. It's almost like finding a hidden mechanism after all this time.
So what's the discovery? It's not just working how we thought?
Well, it does what we thought, but it does more. The big news is they found it also works directly in the brain. Specifically, it lowers blood sugar more effectively than we realized by shutting down a protein called RAP1 and does this in the hypothalamus.
The hypothalamus, that's a key brain region for metabolism, right?
Exactly. It's a major control center.
Yeah.
So discovering metformin acts there, well, it kind of reframes our understanding of the drug. It's not just working on the body's periphery, it's influencing the central command.
So this isn't just a scientific curiosity then. What are the implications?
Oh, potentially huge. Understanding this brain pathway opens up completely new avenues. It's not just about fine-tuning diabetes treatment, although it could help there too.
How so?
Well, it might lead to novel approaches for other metabolic disorders, maybe even conditions linked to the hypothalamus that we hadn't considered before. It gives us a much deeper insight into metformin's broad effects.
So we might be able to use this old drug in new ways.
Potentially, yes. More targeted ways, perhaps. It really makes you wonder, doesn't it? What other long-established drugs might have hidden depths, undiscovered mechanisms working away inside us, just waiting for science to uncover them? A fascinating thought.
It certainly is. A 60-year-old drug still holding secrets. And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.